So a few days ago, Jerome Powell, the chairman of the Federal Reserve, went to the Senate Banking Committee and he spoke for a while, almost 3 hours actually, about monetary policy, and he spoke to a few different politicians as well, including the one you're seeing in front of you here, Senator Warren. She personally spoke for a few minutes asking him questions and really leading a conversation a certain way, and there was some absolutely wild stuff that frankly I think needs addressing. So here, that's what we're going to look at today. I will let her clip run through, let you hear what she had to say, and then explain why she's saying these things and why, to be perfectly honest, I think she's really off base and just a little bit wrong.
Thank you, Acting Chairman. I appreciate the help of the Chairman this morning, and thank you for being with us, Chair Powell. So Americans are struggling with rising costs, and all eyes turn to the Fed. Last week, you announced that the Fed would raise rates by 3/4 of a percentage point, the biggest increase in nearly 30 years. So let's talk about what the Fed is and isn't doing when it raises interest rates to try to bring down inflation. Let's start with gas prices. The price of gas is up 40% since Russia invaded Ukraine in February. Chair Powell, will gas prices go down as a result of your interest rate increase?
I would not think so, no.
Okay. That matters because gas prices are one of the single biggest drivers of inflation. Energy prices overall drove a third of the inflation last month, but the Fed's tools, as you say, have no impact here. So let's look at another necessity, food. Price of groceries is up nearly 12% this year. Americans feel the pinch. No matter how much groceries cost, people still got to eat. Chair Powell, will the Fed's interest rate increases bring food prices down for families?
I wouldn't say so, no.
Okay. So a Fed increase won't bring down these prices. And why? Because rate hikes won't make Vladimir Putin turn his tanks around and leave Ukraine. Rate hikes won't break up monopolies. Rate hikes won't straighten out the supply chain or speed up ships or stop a virus that is still causing lockdowns in some parts of the world. So let's talk about what interest rate increases can do. Chair Powell, you said last week that interest rate increases, quote, moderate demand. Can you just explain a little more about what that means?
Sure. So we think about interest rate increases as affecting financial conditions and then the economy through three broad channels, the first of which is interest-sensitive spending. So that's durable goods and automobiles and things like that. So interest rates go up, people's demand for, as a result of higher interest rates, will moderate or decline so that supply and demand can get into better balance. The second channel is just asset prices generally. Interest rates, as they go up, will cause asset prices to moderate across the economy, and people spend a little bit less out of their lower level of wealth. The third channel is the exchange rate, which is really just another asset price, and that just basically, as the dollar strengthens, as rates go up, the dollar would strengthen, which would tend to drive.
So I appreciate this, and I do appreciate the explanation. But let me just see if I can just put a little more plain vanilla explanation of what's going on here. If I understand what you've said and what economists are saying across the board is that when you raise interest rate, there's going to be less money to invest. And that is, it's going to dampen business investment. Is that a fair statement?
I think the idea is to moderate demand
to invest
so that it can be in better balance with supply. And
so
the current situation, demand is well in excess of supply in some areas of our economy.
More expensive to invest, which in turn is going to throw workers out of work. And when they're out of work, they have less money to spend. So I get that rate increases stop companies from spending money to build new plants or to buy new trucks or to hire new people. Right, Chair Powell? When money's more expensive, they're less inclined to do that. I think that's what you just said on asset pricing, right?
Well, in the labor market, you have, as you know, you have a situation where there's a shortage of workers, and there are two job vacancies for every person who's actively looking for work. So part of this is to get the labor market back into balance.
Well, I appreciate you call it back into balance. What I'm trying to get at, though, is what does the tool of raising rates do? And part of what you just said is that it increases, in effect, the cost to invest, to buy those trucks or new plants or to hire new people. The reason I raise this and the reason I'm so concerned about this is rate increases make it more likely that companies will fire people and slash hours to shrink wage costs. Rate increases also make it more expensive for families to do things like borrow money for a house. And so far, the cost this year of a mortgage has already doubled. Inflation is like an illness, and the medicine needs to be tailored to the specific problem. Otherwise, you could make things a lot worse. And right now, the Fed has no control over the main drivers of rising prices, but the Fed can slow demand by getting a lot of people fired and making families poorer. And while President Biden is working to increase energy supplies and straighten out supply chain kinks and break up monopolies and bring down prices, you could actually tip this economy into recession. So I just want to say, you know what's worse than high inflation and low unemployment? It's high inflation and a recession with millions of people out of work. And I hope you'll reconsider that as you drive this, before you drive this economy off a cliff. Thank you, Mr. Chairman.
So there's obviously lots to unpack there, and to be honest, the only real way to get this completely done is to hit it point by point. So firstly, she asked Powell if gas and food prices will be lowered once the Fed is done with its rate rising cycle. Now this is obviously a very emotive topic. Americans all over the place are really worried about rising prices. Their groceries are far more expensive than they used to be, and gas prices are far more expensive than they used to be as well, and people don't really have a way around this. If these things go up in price, you have to pay those new higher prices, which means you end up poorer at the end of each month. Now, Powell was actually very honest here when he said that no, raising interest rates will not cause gas prices to lower, and it will not cause food prices to lower either, because that's the question that Senator Warren asked him. The problem is that inflation is already here, and you can't really get rid of previous inflation just by changing interest rates today. You can, however, stop inflation from continuing in onto the future. Getting rid of inflation now is not the same thing as getting rid of high prices. Those high prices are here. They're probably here to stay. They're almost set in stone due to previous policy mistakes, yes, from Jerome Powell, but also from the US government in general, and actually most other Western governments in the world as well. The problem with what Warren says is she implies that actually it is the Federal Reserve's target to lower those prices as opposed to just stop them from running out of control. Food and gas prices used to be here, they are now here. Warren is asking if we can bring them back down here, which we can't, but we can stop them from going up here, from continuing to skyrocket out of control where inflation maintains at some crazy ridiculous rate like 9%. Now next we see Senator Warren talk about inflation and how she claims that actually it's caused by outside factors that the Fed cannot institute, that it cannot change. Firstly, she talks about Putin's war in Ukraine, parroting that Biden administration tone of the Putin price hike. She talks about monopolies and greedy companies. She talks about COVID lockdowns and the supply side crisis as well. Now here again, the only real way to tackle this is to hit it point by point. And so we'll start off with Putin's price hike. Now, yes, it is true that the war in Ukraine has caused more inflation. Grain prices around the world have risen as a commodity because a lot of grain was exported from Russia and Ukraine, and that's now disrupted. The same can be said for oil prices and gas prices too, but inflation was around long before Russia ever invaded Ukraine, and you cannot in good faith claim that even the majority of the inflation we're seeing today is a result of Putin's price hike. This problem started over 3 years ago with poor government policy, poor monetary and fiscal policy, and it isn't going to stop until that policy is rectified. Now, monopolies or corporate greed is something that Senator Warren personally parrots an awful lot, and I really think she's being disingenuous here, but she does have a very small point. There are some parts of the economy in the US in particular where basically the state guarantees that a company has pricing power through legislation. Mostly this is seen in the healthcare industry, but for the vast majority of industries, for the vast majority of products that are bought and sold in the US, actually, companies don't have outright pricing power and they are not responsible for inflation. This idea that corporations and their corporate greed is causing inflation really doesn't stand up to much scrutiny. And the easiest way to disprove this is to basically ask these same people if when prices were lower, were these companies being generous with their low prices, because they of course had pricing power back then as well. Finally, we then have the idea that Warren says about lockdowns and the supply side crisis causing inflation, and this is again actually a valid point, though it is a little bit misconstrued. She's right that the Federal Reserve, by raising interest rates, cannot make it easier or harder for products to be built in China and to be shipped over to the US. That will not change whether or not Shanghai goes back into lockdown because of COVID cases. But Warren tries to make the point that actually inflation is a purely supply side problem, when in reality it isn't. Prices are a function of both supply and demand. If there's too much demand, if the government works to stimulate demand and it goes into overdrive, which we have seen over recent years, then prices will rise. Now, we cannot raise supply to counteract that rise in demand, but we can simply lower the demand to fix that high inflation. Then we see Warren say that actually, Powell, you're crashing the economy to save us from inflation. But she would rather have high inflation with a stable economy, whereas she claims that Powell wants low inflation but an awful recession. The problem here is really quite simple. High inflation destabilizes an economy itself. It's almost impossible to maintain inflation levels of 8, 9 or 10% without the economy eventually succumbing to a recession itself. So if inflation is left to fester as she clearly wants it to be done, well, we'll still have that recession anyway. We'll still have that market crash, unless it's actually brought down actively by the Federal Reserve today. Yes, unfortunately, Powell will fix inflation by making average people feel poorer, by tying up their money with debt servicing and things like that. But the simple fact is that it's a necessary evil, and the only reason it's a necessary evil is because of short-sighted policy decisions from the previous 3 years of government, when Senator Warren herself pushed for countless stimulus checks, for helicopter money, for money printing itself, and for ridiculous government stimulus bills to try and get the economy moving when it was already working in overdrive. She personally and the rest of the US government pushed for the policies which actually created this inflation here. Warren is now pandering to the populace, to Americans, trying to convince people that her and the government are fighting for them, that they're trying to keep their money in their pockets, whereas it's the Federal Reserve that is causing all of the problems and they're trying to make them poorer, and that just couldn't be further from the truth. Finally, she decides to end on a soundbite. She says that, "I hope you'll reconsider as you drive this economy off a cliff." Unfortunately for Miss Warren, the economy has already been dead for 3 years now. It's a zombie economy, and it was you who killed it, and you then propped it up with 0% interest rates and gross money printing. And the only way for the economy to move forward into the future, to leave this turmoil in the past, is to let it die so that it can finally be reborn through normal, natural market forces. If you enjoyed this video, then make sure to like, comment and subscribe to bless the YouTube algorithm. It really does help. If you want to join our exclusive community, then check out our Patreon. You get access to our Discord server and extra content like access to my portfolio and buy and sell alerts for all my own investments. Also, make sure to check out the link in the description to Masterworks. It can help you protect your portfolio against market turmoil through fractional shares of art from world-famous artists. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets falling every week. There's also a link in the description to I Trust Capital, which helps you to invest in crypto through your tax-advantaged IRA, which could literally save you thousands. If you, like me, think crypto going down is a buy-in opportunity, then now is the perfect time to join I Trust Capital. Thank you all for watching. Stay stoic. Until next time.